Hello, welcome everyone. And today we can talk some really good strategies. You're in for a surprise as always. This is Siwin Yi and my co-host once again is Julie. How are you, Julie?
Hi, good morning. Thank you, Sewing. I'm doing good.
Thank you for your time. I really appreciate your time and effort. You are one of our members network, one of the top real estate investors and provides very good perspective. You put yourself in the shoes of a typical average real estate investors out there. You are coming from mom and pop real estate investors trying to make things better for yourself financially. From my perspective, I'm coming from the side of a business. I'm trying to try to help you invest through my network if that's what you want. So the opportunities is there. So at the end of the day, as always, provide great, valuable content through our
Mhm.
podcast in terms of real estate investing and everything about the real estate market. The first module is how to build your personal real estate empire in approximately 10 years and retire free and enjoy the rest of your amazing life. Uh,
Absolutely.
Yep. So here's the potential strategy that, again, this is just a high level from 20,000 foot view. Everybody's situation is different. Some of you cannot do all the strategies that we discussed, but I call this a blueprint of your real estate action plan, right? Of course, people will need to be adaptable. People need to be adjustable. Of course, you have to incorporate the capital resources one has available. You may not be able to do all the strategies we discussed, but we are creating a blueprint for you. And it's a long journey. You have to go through the process. It'll take you 5 to 10 years or more to really scale the portfolio in a way that we discussed. So the reason why this outline, the reason why I want to do this, because again, this is your potential blueprint. This is a master class, if you will, to just to share with you what are the tremendous possibilities out there for you in
Yes.
the real estate investing landscape. First and foremost, house hack. Of course, Julie, we have other YouTube videos and also we can go into detail. You and I have done a lot of these topics over the past years. So feel free to look at my YouTube channel. And better yet, at the end of this video, if you have not already done so, you put your email at the bottom of the screen. You can put your email in our website database and you will receive. You could be a free member of our real estate investment club. You can learn more about all the strategies and then some. All right. So I'm sharing with everybody the optimal way to create your portfolio, scale it, and achieve massive wealth over time. House hack. I'm going to go very quickly, very high recap, and you're welcome to provide your input as you always do. Julie, thank you for your input. Number one, the first step is house hack. House hack 1 to 4 unit. So that means you could house hack a single family home, duplex, or fourplex. If you qualified for the VA loan, which I qualified, which I've done over many decades, house hacking. So house hacking means you'll buy primary home and owner occupied home 1 to 4 unit up to a fourplex using VA, Veteran Administration, zero down payment, or
Mhm.
using an FHA, minimum 3.5% down payment, and using a 5% down special loan that was just created last about 9 months or 8 months ago. The 5% down, owner occupied. And so therefore you live in one unit and you could house hack a single family home. You live in one of the bedrooms and you rent out 2 or 3 bedrooms to a tenant that I personally do not like
Mhm.
strategy because of privacy issues and
Right.
all kind of hassles. But I prefer, if you qualify, that is, your house had a 2 to 4 unit, a duplex or fourplex. Of
Yes.
course, every location in the US is different. Of course, in California, Julie, you live in Southern California, in LA
Mhm.
area, and I live in San Francisco area. It's very hard to buy any kind of rental property, let
Mhm.
alone house hack. But if you go to a cheaper area in the
Right.
suburbs of California somewhere, you might be able to house hack a duplex or fourplex or triplex, and as
Mhm.
long as the price is not higher than
Right.
1.3 million. So
Mhm.
house hack is you get a primary home loan based on
Right.
scenarios, and then live in one unit and have the unit have your second and third and the fourth unit of the renter, the tenants paying down your mortgage.
Right.
You're not going to live rent free because
Hmm.
houses in California is so expensive.
Right.
You will most likely still have to pay a portion of your mortgage. But the great thing is the other tenant can pay down 50 to 80% of your mortgage to
Hmm.
pay for the housing price. But if you live in other part of the country and of the 50 states, you can do house hack with a much cheaper 1 to 4 unit, and you live in one unit. And of course, you have the tenant paid off, pay down your mortgages, and you can pretty much rent free, especially when you buy in a cheaper market, like in the Midwest or South and Southeast
Good.
house hack. And of course, you have to live there legitimately. You have to qualify for the home loan. And then at a bare minimum, within a year, at minimum, you live there for 1 year and you can eventually leave that
Right.
house and then rent out the remaining vacant unit that have been occupying minimum 1 year of residential requirement living there. And then you house hack another, you want to, you can house hack another properties. Not everybody wants to do it, so it's a lot of
Hmm.
hassle. Before we go on to the next strategy, Julie, what you and I discussed about house hacking before,
Hmm.
going to leverage your wealth, especially when you do not have a 25% down payment investment property outright. So although a beginner, a first-time home buyer can do this, but however, an experienced investor that have multiple properties over time, they can also house hack
Hmm.
like I have done and like I continue to do. So you can be an experienced investor, you can be a first-time home buyer, you can still
Right.
house hack. So what are your thoughts in terms of what are your
I think the big advantage in doing the house hacking is that you're able to secure the loan as an owner occupant. You see what I'm saying? So you don't have to come up like a normal investor might have to come up with 20, 25% down. You can come up with, like you said, if you're a vet, you can come up with nothing or FHA 3 to 5%. And so it allows you to get into something. It might not be the ideal situation. Like I said, maybe you don't want to share your duplex with the neighbor down the street, but it's a great way to get your feet wet and get in the door, fix it up, do whatever you need to do. And then you can move on and have, if you have a triplex or a fourplex, have the tenants pay for everything. So it's a great strategy. And you can take that money and then move on to the next project.
Yep, yep, that's right. Okay, all right. The next strategy. Now, that's something that you and I have been talking about for a long time. I've been doing this for several decades. I'm a real estate wealth advisor for several decades, and I have helped hundreds, if not thousands, of real estate investors to buy rental properties using the strategy that we are discussing
Great.
throughout today's presentation. The next step will be maximum optimizing is by at least 10 plus rental income property using the Fannie Mae lending guidelines, maximum of 10 mortgages per person. What I mean by that is, so Fannie Mae, and they have the best loan program right out there in the market. But there's a limitation. You can buy, you can get 10 mortgages maximum per person, the Fannie Mae lending guideline restrictions, and we go above 10 units, or you can do a commercial loan by 5 or more units. Beyond that, if you have those ambitions or have just motivation, if you have the capital, you can do beyond 10 mortgages, or you can do a DSCR loan, right? DSCR, debt service credit something. DSCR is
Okay.
you can still buy, you continue to buy 1 to 4 unit using the DSCR loan, which is
Mhm.
no income documentation,
Mhm.
as
Mhm.
long as you have the 25% down payment, and I have a very high credit score to qualify to
Right.
DSCR. This acronym, sometimes even I don't get it.
Oh, yeah, no, I understand. I understand.
You know
Mhm.
why DSCR?
I don't know if I've heard that term. I don't know if I've heard that term before, but I'm still new at the game, so I'm learning.
It's pretty popular for people that have more than 10 mortgages and they
Okay.
no longer qualify for the additional, the most
I
ideal Fannie Mae lending guidelines. But
see.
anyway, let's go on. So
Yeah. No.
with respect to the 10 mortgage guideline, 1 to 4 units equal one mortgage. Right? Ideally, most people can buy a single family home, uh,
Mhm.
re- residential income property, but there's opportunity with by duplex and fourplex, maximum fourplex. under the Fannie Mae lending guidelines. Yeah, so whether you buy 1 to 4 units, it's under the Fannie Mae guideline, it's still only one mortgage. So
Mhm.
technically speaking, you can buy 10 fourplex, which is
Right.
using this 10 mortgage limitation, 10 4 door per fourplex times 10 mortgages, you could potentially get quote unquote 40 doors.
Exactly. And
Right?
then the other thing too, with the mortgages, like in the case of a husband and wife, like my husband and myself, you can buy 10 in each name.
Yes.
So technically do 20 if we get to that point. So I think that is something to be aware of, even though we're considered a mom and pop investor. You could literally have 20 mortgages out there between a husband and a wife.
Oh, as a matter of fact, which is a very good point. As a matter of fact, many of the investors I've been working with over the past several decades, just to go to show you how long I've been doing this. I've been investor. I've been guiding people through my investment stuff longer than 99% of all the so-called real estate gurus out there in the country. Would you agree with that, Julie?
Yes. Yeah, I totally understand. I totally agree with that. Yes. Mhm.
Most YouTube real estate gurus out there, they only been doing it for several years. If that,
Right.
they have no business of guiding people because they
Mhm.
lack the experience, the background, the expertise, etc. They lack the credibility or the reputation and track record, which I have.
Exactly. Experience is the best teacher. I think a lot of times these gurus are making more money off the seminars than they are actually doing the work. You
Yeah,
know, property
yeah,
this way. But
yeah.
and that's not to speak about everybody, but you have to make sure you really vet. If you're going to get a mentor, make sure you vet that person.
Yeah. Everything, Julia, you've been with me for 3 or 4 years only, but and you have
Right.
amazed, I believe, 6 rental income properties under your own name and all that.
Right. Right.
You and your husband, Mark, staying great scaling of your real estate portfolio, giving you have a late start uh,
Yes.
within your in terms of your real estate acquisition. But anyway, everything we discussed, I've done over the years for my own personal portfolio and help with hundreds of real estate investors out there, mom and pop investors.
Right.
Now, some new strategies that I have incorporated into this concept of doing this is giving you have that risk investing has changed so much over the past few years, not only during the pandemic and even before that. So as a result, I have incorporated some additional strategies for our investors from a high level. So additionally, you should when you start to slowly, consistently, and gradually scale your real estate portfolio, you should use a combination of short-term rental, which is Airbnb
Mhm.
type, or medium-term rental, which I've been really promoting this quite a bit. You and I together. Uh,
Yes.
so my strategy has uh, adapt to the current real estate situation. Medium-term rental is up and coming, and of course, the traditional long-term
Right.
rental. Within 10 or more properties you're going to acquire in the next few years and beyond, you should do a combination of short-term rental, medium-term rental, and long-term rental. And so what's your quick comment on that, Julie, on this strategy?
I think it's an excellent strategy. I look at like the long term rentals. I look at the whole concept like a triangle, like a triangle. Your long term rentals are like the bottom, the foundation. And then you really work with the other two, midterm, short term. Don't probably put as much money into it, but because you always have your foundational. But then it's great strategy to really bump that income, a little more risk. But then, like I said, you have your foundation of your long term. And it's just like diversifying any portfolio. You want to have a mix of everything.
Yeah, the way I call it is a different asset class, right?
Yeah.
Different
Right.
real estate asset class, a combination of long-term traditional rental, medium-term rental with 30-day plus renting and less than a year. So that's a medium-term rental. And of course, and have all the resources available. Everything we talk about is on my YouTube channel and also on my network. If you're part of my network, put your email below, sign up. It's free of charge and all that. And so that's, yep, diversify into different type of asset class.
Right.
And
Absolutely.
furthermore, Furthermore, you buy into several geographic markets for diversification. What I mean by that, buying into several strategic different markets. So you know what I do already. From your perspective, Julie, what is your takeaway from
Right. I think that different markets offer different opportunities. And I totally 100% agree. You do need to diversify where you have your properties. Ours are mainly up in New York State or upstate New York area, which does offer a benefit, very high cash flow. And the property values are lower. So that's a lot of how we were able to get into and get so many scale up so quickly. But then you have other areas that are more focused on like property appreciation, like your Florida areas, your Texas areas. And those are great because you've got a lot of people migrating to those areas. And so it's a very popular area, which again, in turn, shoots the price up. So it's like that, those types of things you've got to really get in at the right time because to take advantage of the property value and the increase. Because at some point, some of those places like California, you got to be priced out in terms of investing. And then you have your southern states, Alabama, Tennessee, things like that, where it's like a hybrid. You do get the cash flow, but then you do get the benefit of the growth as well. So it's really just important to understand what is your goal and then take it from there to decide where you're going to purchase your property.
Yep, absolutely. And meanwhile, doing your realistic, very good point, very good analysis, Julie. And finally, during your realistic investing journey, you should also tap into the IRAs and your previous employer 401k that
Mhm.
you see. A lot of people have a lot of IRAs. It's all over the place. So meanwhile, you should use your the IRA to buy foreign assets inside the IRA. So all this property, all this physical property we just discussed, you could
Mhm.
buy it inside IRA. And a lot of people have a lot of IRAs and over
Mhm.
the years, and they don't know what to do with it. They've been misinformed. They think we only invest in IRAs and mutual funds and stocks and
Right.
bonds with the traditional brokerage, the Charles Schwab of the world, the Fidelity, the Dreyfus, whatever mutual fund custodian providers. But there are still very few people are aware that you can use your IRA to buy a physical asset, an income property, such as any kind of units for that matter.
Yeah, that was the most revolutionary strategy I had heard. Because everybody's heard about investing in real estate, but I had never heard that you could actually take your IRA and invest in real estate, turn it into a self-directed IRA. So that was exciting for us because my husband and I, that's where most of our money was in our IRA. That we're just sitting there. My husband's still working, and so we weren't using it. But now we've been able to put those. In fact, the first two properties we bought were both in our retirement account. So that was great. I think people should really look into that strategy if you're thinking about doing something.
That's right. What you just said is tomato and the horse's mouth, which is real.
Right.
You have purchased property through a regular investment loan financing, through your name, through your husband's name, Mark, and you self-directed IRA
Right.
to buy investment income property real estate inside IRA. So you're making money multiple different ways as we discussed on this video.
Mhm.
Yeah, let's get back to the slideshow. All
Mhm.
right, Lindsay. All right, so let me give some example. Again, want to make this high level presentation 5 minutes more because there's a lot more details in this. But so with that in mind, these kind of houses that is real, is something that we promote within our network. So everything we discussed so far, you can do, right? So you
Yes.
you bought this type of property, very high cash flow, turnkey property
Mhm.
with a professional property management. In fact, everything we just discussed, buying the strategy we discussed so far,
Right.
you can do it almost passively. You can do it remotely. And
Yes.
furthermore, which is the surprise a lot of people. I know there are other ways to buy real estate, right? 1,000
Right.
different ways, by the way. You're still working, or if
Mhm.
you have a full-time job, if you're busy with your family, especially when you live in a high-cost area such as California, in which you and I live,
Right.
or take the Northwest or north the northeastern part of the US, New York City, New Jersey,
Right.
uh, or Massachusetts, where it's a very high cost of living. You can't really buy a capital properties in those markets because they're so expensive. So you have to
Mhm.
go to some other sources to buy out of state, long distance, remote, doing and have property management. So with that said, That's why you can scale, whether you can own 10, 15, or 20 properties in the next 2 years. By the way, let me ask you this quick question before we go through these details of the pro forma. Not only with your 6 property portfolio, just uh, yeah, if you were, if you put yourself in your shoes, if you can buy 5 or 10 more properties in the next 2 years, which that's your goal,
Absolutely. Absolutely.
getting this turnkey remote passive using a very reputable turnkey provider on the ground, how many hours per month you spend in managing your mass real estate portfolio at this
About 1 hour. It's
not
great. It's great.
not 1 hour
It's
per
1 hour
day,
a
not
week
one
or a
hour
day.
per week, one
Yeah,
hour per month.
absolutely. It's seamless. We don't worry about anything. We don't fix anything. That's why you have a property manager. They take care of all the work. No one is telling us about the property. And like I said, until we get the rent check in on the 15th, I forget that we have property. But yeah, but it's like the evidence is there every 15th of the month.
That's right. Okay, very hard to fathom. Most
It
people
is hard. And I'm looking at this property. This would be a great property for someone to do inside of their IRA or self-directed IRA. Because you got a great, it's not that expensive, $67,000. Again, coming from California, you pay $67,000 for a driveway to repair your driveway.
garage,
You know,
one garage
yeah,
door.
exactly. So you could take your self-directed IRA, you have a net operating cash flow of $564 every month going back into your IRA. So you're not taking that cash. There's no tax consequence because it's just like any other asset in a retirement account. And then you just continue to let it build from there, not just the income that you're getting from the tenant, but then the property value is going up as well. That's a win right there.
Or yeah, exactly. Yeah. Or you can get financing. And yes, you can get financing. You get 25% down payment to buy this $67,000 turnkey rehab property or rent it. And if it knows your total down payment is only like $21,000 in total closing costs, and it rent down for $850. So your monthly net cash flow is $237, even though you're getting a 7% 30-year fixed rate mortgage. Yes, 7% mortgage, you can still cash flow quite nicely with the corresponding nice numerical benchmark numbers here, which is loan to value ratio, capitalization rate, cash on cash return, all very nice. But I don't want to spend too much time, but cash flow property, and then of course you can buy. So when we say diversify geographically, right? This Buffalo Niagara Falls is a Midwest type region in terms
Mm,
of location, right? That's one way you should buy. Yeah, I'm going to go through some additional pro forma a few minutes from now to go through the other geographical market. We should entertain you doing it part of our presentation for today. So you diversify amongst the family home, duplex, triplex, and fourplex. That's the max. Fourplex is the max for
right.
any lending guidelines. So even though we talk about Buffalo Niagara Falls, we are not talking about the Midwest or Ohio, Illinois, or Michigan, or Tennessee, or Missouri. All these 40% of the US geographic or so-called Midwest markets where the prices are very low because they're older properties, but a lot of people still are investing in this Midwest market as part of the diversification methodology. So duplex, again, I'm not going to go through too much scenarios, but very low price, 117K duplex and 25% down payment, even at 7%, or even 7.5% mortgage
Right.
rate. So you and I know it's not about mortgage rate.
Great.
And you can always refinance later, right? You,
Yes, absolutely.
you date the loan, but you marry the income property, right?
Right.
Always refinance later, get more cash flow. But anyway, cash flow is amazing. Even with the high mortgage rate in this Midwest market, this is a duplex. Now, finally, the fourplex, only 173K rents for whopping 2,300 on all four
Wow.
floors.
Nice.
25% down payment, even a 7.5% mortgage rate on your fixed, you still cash flows almost $800 per month net after all the expenses. And we look at this, the numeric metrics, the rate to value ratio exceeds 1%,
Yes.
capitalization rate 11.3%, cash on capital return 19%, total wow, like 32%. I know some of you are thinking, what the heck is he talking about? You learn more about this numerical metrics on our other YouTube videos that we put together. You on that later. Okay, so here's some of the Alabama property. a nice turnkey property, not very old, 30 to 40 year old. They've been rehab properly, all done by this great team that we have in Alabama. So properties like $200,000 rent for 1550. They,
Right.
they give you a builder, a seller, they give buy it down the rate to 5.5%. So you get cash flow, right? I mean,
Mhm.
but that's the great thing about working with a turnkey system, a reputable turnkey provider that is, which is not that easy to find. So that's
Mhm.
Alabama. And finally, in Texas and in Alabama, Texas and Florida, very good markets, very high quality locations, fast growing, the top fastest growing market in the country. So you buy in a good sub market in Central Florida, new brand new construction, 264 units for 1,700. You get a 25% down payment, and the builder gonna buy down your rate and 4.75%, even though
Right.
today's mortgage rate is probably 7.3% for older occupied rates. For the
Right.
investor rate, today's mortgage rate is as we talking in the middle of April 2024.
Mhm.
The mortgage rate for investors, if you do not get the rate buy down, buy on your own, the
Right.
mortgage rate could be like 7.78%.
Exactly.
If you buy an investment property on your own somewhere else as part of our network. So you're not going to cash flow, right? I'm going to show you the incentives and the benefit of working with a good turnkey providers such as our network. Anyway, so this great property in Central Florida, 264K cash flows. A duplex, brand new in fast growing location in Central Florida, only 379K and
Right.
right buy down in this South Texas. You can buy a brand new fourplex with only 545K in one of the fastest growing area in Texas, let alone the country. Very low cost, high quality, 25% down payment, even at a 7% rate with a down payment of 150K total and still cash flow mightily at the end of the month, almost $800 monthly net cash flow, which is an amazing deal, something you cannot find anywhere else. Brand new fourplex in the fastest growing region in the country, South Texas, and which is amazing. Of course, you can also go back to Florida, brand new construction, fourplex, 800K, $800 million for excellent rents with a rate buy down, 4.75%. Okay. All these markets are growing very fast. Migration growth, Florida, Texas, even in Alabama, Tennessee, even in the Midwest, there's a lot of areas are growing. At the end of the day, you surround yourself with a good turnkey provider that do the property management for you and everything else. And then on this scenario, we talked about the using your IRA. If you're using $545,000 of IRA to
Mhm.
buy income property in this scenario on this fourplex, because you buy with all cash, your monthly net cash flow inside your IRA is almost $3,600. So
Nice.
$3,600 multiplied by 12 months. At the end of the first year, your monthly net cash flow, cash tax deferral. You don't pay taxes on this cash flow because you bought it inside your IRA.
Right.
43,000 divided by the purchase price of 545. Your yield,
Right.
your return is 13%. Can you buy, can invest
Right.
consistently
You're not
on,
going to get
on
that in a
stock
bank.
bonds or in mutual funds, getting a 30% annualized
No, you're not going to get that anywhere. And that totally has the potential to go up too, because your rents are going to increase over the years.
Absolutely. A 13% return is mind-boggling. That
Mhm.
you double, triple the regular traditional mutual funds or
Right.
stocks and bonds portfolio.
Right.
It's
Right.
no comparison. Now, you can also do a non-recourse loan inside the IRA. Let's say all you have is like little bit less than $400,000 of IRA, and you still want to buy a property of this price range, 545K, you can do a 30% down non-recourse loan to leverage your IRAs and you purchase more, right? Although
Right.
your cash flow, because you have a mortgage inside the non-recourse loan, which is at $1,257, which
Mhm.
your IRA can pay for it, but your monthly net cash flow is 2,300. But you're leveraging, a lot of people are not aware you can leverage your IRA to purchase a for income producing assets inside the IRA. It's called non-recourse loan. The maximum loan to value right now is 30%, 30% LTV. You see what
Mhm.
8.5% interest rate on a non-recourse loan because it's a secondary loan, it's a private loan. So
Right.
still, you're leveraging your money. That's two ways you can use your IRA. Buy with a full cash purchase with the IRA and buy with a 30% non-recourse loan. Do not have sufficient IRA to buy a property, which it costs more. So
Absolutely.
yeah. So what you take, I think we're about to conclude this particular presentation. So what
Right.
you take away, what you recap on everything we just
I think the different, particularly the different properties that you showed, can offer different benefits. Like we talked earlier, you showed Texas, you showed Alabama, you showed different places around the country that offer different benefits. And I think really the possibilities are endless on how you can realize your investment dreams using your IRA or using a small down payment or using an FHA loan. You can really, there's no reason why someone that really wants to get into the business can't get into the business because there's so many different ways and so many different strategies that you can do it.
Yeah, one more thing, Julie. So we go back to our presentation, and we talk about medium-term rental. All the cash flow that we discussed on all the pro forma, a
Right.
medium-term rental, again, we have no time to talk about it, but you can rent to a traveling nurses, you can rent to
Mhm.
a digital nomads, whatever. You can rent for
Right.
30, 60, 90, 120 days. You fully furnish your unit. You can rent it typically 50% or more than a traditional long-term rental rates. Keep that in
Right.
mind. Medium-term rental is up and coming in a fast-growing market especially in Texas and Florida. Fast-growing, affordable markets that we always just discussed is prime for medium-term rental because we have properties in those locations in Texas and Florida where the rental property you buy with a long-term rental strategy uh,
Right.
as a priority, you could adapt and transition into medium-term rental, especially when your properties are located close to hospitals and close to colleges and universities. All the growth within the area is prime area for medium-term rentals, and you can accelerate your rental cash flow. Is more effort is involved than a long-term rental. You should buy and forget it, right? Long-term rental, especially with the property management. For medium-term rental, is a little more work, but
Right.
it's done is fast growing. And then so short-term rental, I don't particularly like short-term rental that much because it require more effort and more maintenance on your part. But you can do it remotely. You can do a short-term rental Airbnb if you live in California or New York City or wherever, high cost,
Right.
but as long as you have a good system, good process and procedure, and you can leverage your property management, the other property management that have the ability to do your short-term rental for you. And
Right.
so short-term rental, they cost more, they
Right.
require more outlay, more capital on your part, and it's riskier, especially when many areas in the country where they have a lot of restrictions
Okay.
associated with short-term rental. And we all have heard that, right? But if you find the right system, who's to say you cannot do short-term rental? Because if you do short-term rental, there's a short-term rental tax strategy loophole. They call it short-term rental tax loophole. I hate to use the word loophole, but
Right.
it's legal and a lot of people do it. So you can get tremendous amount of tax benefit. By the way,
Mhm.
what is professional tax status? We talk about you and I from
Right.
our previous videos. You could become a real estate professional status, right? Married, if you have a married filing joint, if you have a high tax bracket, and your spouse is not a working spouse or part-time spouse, material participate on your real estate portfolio. For example, self-managed those properties. Yes, you can still self-manage out of state long distance properties. It still doesn't quite well matters and you qualify for this professional status, or the depreciation or the tax benefit can offset active income, which is amazing. Normally when you buy a rental property, your passive losses, the depreciation can only offset against passive income. That's a sort of a limitation on terms of the tax benefit. But with the short-term rental tax loophole, you can materially participate in the management of your short-term rental. All the depreciation and expenses can offset your W-2 active income, which is tremendous savings. One more thing I want to say, bonus depreciation and cost segregation. I'm not going to go into detail because I don't want to make this presentation too long.
Right.
Or something you and I discuss on our other videos, powerful strategy. And look, everybody's situation is different. A lot of people cannot have a limitation in terms of passive losses, depending on your status. Of course, consult with your tax advisor. And then they hit the recap what we just discussed. What we discussed is a brand new, revised, updated in 2024 and beyond. Because you have to be cutting edge. You have to look into the current and look to the future. Because real estate must have changed drastically. We are in a new normal. The pandemic has have changed the way we invest across the boards, especially in real estate. So what we just discussed, I'm sure you're agreeing that to recap, okay, house hack, wonderful. If you can commit it to it, if you can show some sacrifices, you can do it. Doesn't matter where you live in the country, okay? We help you and I help people from all over the country. We have investors from all over. I'm personally guiding. My network is helping. Doesn't matter where you live. By remotely, by passively, do it. Do a short-term rental, medium-term rental, and long-term rental by 1 to 10 unit using favorable Fannie Mae lending guidelines, the best interest rates, the best way to qualify. 30-year fixed rate mortgage. You can't ask for anything better than a 30-year fixed rate mortgage. The other part of the world, they don't have 30-year fixed rate mortgage. You Americans are so spoiled. You have so many benefits. Right? We compare.
Absolutely. 100%.
Wow. Did I cover it? Did I just provide a nice recap before we
No, that was great. It was great. I think that the thing is to do your research, like anything you're looking at, but to really know what you want, make the decision. And I think the thing is, I was talking to my husband earlier today. When we met you, we were ready to make the decision. We just needed the information to do it. So it is possible. We weren't working with a lot of resources, but we were able to scale up very quickly. But we just had to be willing to do the work. And now we did a lot of work in the beginning to reap the benefits now, and it's seamless. We don't worry about anything, and they're just working for us. And we're taking advantage of the tax advantages, the income, the appreciation, all the things that we've talked about in the past. So it can work. It will work if you just do the work.
Exactly. Thank you for your kind words. Anyway, Julie, but everything we just discussed so far, you have to remember, we have the resources. We have the resources. We have the properties available, turnkey property. We have a network of turnkey providers that can help you go through your journey, go over the strategies we just discussed. Is this amazing? The big picture, the next 10 to 15 years, you can make this happen.
Right? Oh, absolutely. You're going to be somewhere 10 to 15 years, so you might as well make the most of it.
Absolutely. All right. With that said, thank you so much, everyone. And again, if you receive any kind of value whatsoever from this presentation, please like and subscribe to my YouTube channel. And better yet, put your email into my website below link so you become a real estate insider within our network. Free membership, part of a community or several thousand members within our free network. We continue to learn about real estate investing in all aspects of it. And of course, thank you so much, everyone. Thanks for watching. Have a nice day.
Thank you.